Where did the Nashville real estate market finish as of the end of 2022, and where are the experts predicted that we are heading in 2023? I'm covering all of that coming up in today's video.
Everybody, welcome back to my channel. My name is Caitlin Martin and I am a local Nashville real estate agent and founder of the Caitlin Martin team, powered by 𝐋𝐈𝐊𝐄 Realtors, the Andrews Group. I specialize in working with savvy sellers who want to sell right and sell smart, as well as working with out-of-staters looking to relocate to the Middle Tennessee area. Now, if this is your first time stopping by my channel, thank you so much. Please feel free to click subscribe down below so that you are notified anytime I release new video content. So in today's video, we're going to be taking a look at what the statistics show us from where the Nashville real estate market ended as of the end of 2022. Plus, we're going to be diving into what the experts are predicting as we move forward here in 2023. So let's go ahead and dive on in. So the numbers from the Greater Nashville Realtors Association just came out, and it shows that we are actually down when it comes to our closings for all of 2022 compared to 2021, which doesn't really come as much of a surprise because we have seen our market really kind of pump the brakes since about the end of April of this year. But let's actually take a look at the numbers. So closings for all of 2022 were actually down 15% from all of the closings in 2021. Now, when we look at December, that number is going to be even greater. The total number of closings for December of 2022 compared to December of 2021, they're actually down 40%. Now, I know that if you start to hear the numbers down, especially with the way that the media does their headlines, it can sound really scary. And I know that if you start to hear down and negative and all of this stuff, it can automatically start to make you think of things like crashes and this and that. But here's the thing, we've got to actually talk about this. And it's really not that much of a surprise that we're down a little bit in terms of year-over-year closings. And it's not that much of a surprise that we're actually down in December, because December historically is a month when we see fewer closings as we close out the year. You know, a lot of times people aren't trying to close and move right before the holidays. It does happen, but what we saw in 2021 was actually contrary to what the traditional December market looks like. So when we're saying that December over December, one year to the next, was down 40%, what we saw in 2021 was an anomaly in terms of what was happening in December. Because if you remember, or maybe this is your first kind of real introduction to what's been happening in the Nashville real estate market, but as of May of 2020, we really started to see a strong march through our real estate market, a strong march towards that higher demand and watching our real estate market accelerate, which we did have a pretty strong December into January as we headed into 2021. And then it was in March of 2021 that our real estate market truly exploded. So we did, heading into 2021, we saw that December have stronger numbers than normal. And then we were in the midst of that white hot market when we were in December of 2021, headed into 2022. So those two Decembers, we really saw more strong closing numbers versus what the traditional December numbers look like. So to say that we're down, it's not that much of a surprise considering that our real estate market, we've really started to watch it stabilize and normalize, because when we were dealing with that white hot market where homes were going exceedingly over list price and going with 30 plus multiple offers, that kind of market was not sustainable. So when we're looking at that 40%, before you start grabbing onto those headlines out there that are like the market's crashing, our market is not expected to crash. Now, I cannot speak for all of the US. I cannot tell you, because here's the other thing.
real estate is really hyper local. And so what is happening in Nashville can be totally different than what's happening in Texas, what's happening in New York, what's happening in California. So we really have to take a look at when I'm talking about what's happening in Nashville, I am truly talking about the Middle Tennessee area and the counties that do make up the Middle Tennessee area, that make up Nashville and the surrounding counties. So when we're looking at it, we really have to keep that in mind in terms of, again, what may be happening in another city may not be the story of what's happening here in Nashville. So what is expected to happen? I know I've mentioned this in previous market update videos, but it still begs the discussion because, again, y'all, the media is going to always have a fear-based clickbait headline. And what the media, what stories they're spinning out may be talking about things on a national scale when, again, real estate overall is really hyper local, to the point that what could be happening in one neighborhood is different than what's happening to a neighborhood right down the road. So we really have to take a look at that and proceed with caution when it comes to reading all of the media headlines. I really started saying this. I know that a lot of other real estate colleagues and I have been saying this, but do not let the media dictate your real estate decisions, because at the end of the day, the media is not going to care about your bottom line. They don't care about your home buying decisions. The media as an industry does not care. So the best thing that you can do is to talk to a trusted real estate advisor and see what is happening in the market that you're looking to move to, and find somebody that you trust and you can take their advice, because at the end of the day, it's really those tried and true real estate agents that really care about their business that are going to give you the best information possible so that you can hopefully make the best decision possible for you, and let the take what the media says with a grain of salt. After all that, that's my little soapbox moment. But I will tell you, just make sure that when it comes to real estate, you are trusting a real estate agent more so than you are the media. But we got to take a look at what these real estate experts on the national scale are saying, and we're also going to be taking a look at factors in Nashville and what is predicted for the Nashville market. So at the end of December, one of the positive up numbers was our inventory. Our inventory was up about 5,000 more properties in December of 2022 versus December of 2020. So with inventory being up, what does that mean for 2023? It means that there's going to be more opportunities for buyers heading into 2023 and beyond. So a lot of times you start to talk about that, and the first thing that people start to then bring up is going to be interest rates. Here's the thing. 2023 overall is anticipated to be kind of bumpy as we find our way through it, right? Because interest rates towards the end of 2022, they receded just a bit, but there's a lot of national economic factors that we really can't control. And those things can then affect interest rates. So interest rates are expected to fluctuate. As of right now, they're not seen to fluctuate in a massive way, but there will be fluctuations from what everyone is saying so far. So we can anticipate that happening. But this also, with the rise in inventory, it also means more opportunities for buyers, which is great news for buyers, because here's the thing. If we're thinking about interest rates and we're looking at inventory, there really is a great window of opportunity. Here in Nashville specifically, our inventory is up, which means that buyers are having more opportunities now than they've had in a long time, because a year ago we were seeing multiple offer opportunities happening constantly, which made it really, really tough for buyers, and buyers were having to bid exceedingly over list price in order to hopefully win out on the home. So now, instead of 30 offers on one home, now there are multiple homes to choose from, which means that buyers actually have a moment to truly make an informed decision on the home that they want to make an offer on. And when we are going back to the interest rates issue, here's the thing. If interest rates go up, you're going to be glad that you're locked in now. Now, interest rates are not expected to tumble back down to where they were at those where they were at those historic lows. So here's the thing. If they go up, you're locked in at the lower interest rate. If they eventually go down to where it's gonna make a significant difference in your payment, you always have the opportunity to refinance. But if they go up, you're gonna be glad that you're locked in at a lower rate. So interest rates, and here's the thing, if you're looking at interest rates over the grand scheme of the last 30 plus years, interest rates in the 80s were at like 16 and 17 and 18%. So 7 compared to that, we're doing okay. It's just, of course, when you saw the historically low interest rates, of course, now this doesn't feel as good. But marry the house, date the rate. So with this kind of opportunity, buyers don't necessarily have to make a snap judgment. They can take their time to process, pick a house, which means there's going to be more of an opportunity for true buyer satisfaction instead of having buyer's remorse, which is something that we have seen from time to time where people had to make snap judgments and had to bid exceedingly over just to get a home because inventory was so low that then they get in it and live in it and it's not really the right fit for them. And that's okay. I understand what transpired, but when you have more homes on the market and you're not necessarily up against a multiple offer situation, you have more of an opportunity to really be satisfied with your purchasing decision. So let's take a look at what the experts are saying as we start moving through 2023. So according to Housing Wire says the red hot housing market of the past 2.5 years was characterized by a sub 3% mortgage rates, fast-paced bidding wars, and record low inventory. But more recently, market conditions have done an about face. Now is the opportunity for everyone to become re-educated about what a typical housing market looks like. So I really love what they said because that is just speaking to the market that Nashville has been in and what we're seeing now. A lot of people, again, going back to those news headlines, they really want to make it seem like the Nashville market is crashing, and it's not. We're just reaching a more stabilized, normal market, which is good, and it still provides opportunity for those looking to buy and sell. Now let's take a look at what the National Association of Realtors is saying for 2023. They say, while 2022 may be remembered as a year of housing volatility, 2023 likely will become a year of long lost normalcy returning to the market. Mortgage rates are expected to stabilize while home sales and prices moderate after recent highs, which again is something that we've seen here in Nashville. I know that a lot of even the local headlines here will be like, oh, home prices are plummeting. No, they're just normalizing, because you have to realize, if you're analyzing what happened when we were in that white hot market, when you're looking at pricing, you have to look at, okay, well, what part of that pricing was owned by the market, and then what part of that pricing was owned by the buyer, because when inventory was so low, a buyer was willing to go exceedingly over list price, and so they were owning a chunk of that pricing. But now that inventory's up, demand has receded just a little bit, we now have to reevaluate what is the market truly owning and what had been owned by the buyer that is now not there anymore. So instead of thinking that, oh, our prices are crashing, it's just, no, we're stabilizing, because what the buyer owned is not being required of a buyer now. And so now we're looking at what is truly being owned by the market. Now let's take a look at what Danielle Hale, the chief economist at Realtor.com, says when it comes to looking at what's coming up this next year. She says buyers will not face the extreme competition that was commonplace over the past few years. And then we got to take a look at what Lawrence Young, he's the chief economist for the National Association of Realtors. Let's see what he said. He says, after a big boom over the past 2 years, there will essentially be no change nationally. Half of the country may experience small price gains, while the other half may see slight price declines. And that's exactly what I've been saying. He right there points out that the real estate market is hyper local. So what some cities may be seeing is not what is necessarily going to be happening in Nashville. Then last, let's take a look at what Mark Fleming, who is the chief economist with First American. Let's see what he is predicting. He says the housing market, once adjusted to the new normal of higher mortgage rates, will benefit from continued strong demographic-driven demand relative to an overall long-run shortage of supply. So across the board, everyone is essentially saying we're returning to normalcy, which when you're so used to the last 2 years seeing an abnormal market, this can feel really different. But we're returning to a normal market. There is still opportunity for buyers, and even if you're selling, there is absolutely still opportunity too. Does it mean you're gonna get the sun, the moon, and the stars with 30 offers all over list price? No. But again, that kind of market is not normal and it's not sustainable long term. But it doesn't mean that you as a seller would have to take a major hit on your home. It just means that we are going to be returning to normalcy. Things like inspection, repair requests, and amendments, those things have come back to the market. And so it's going to be more of a balanced deal as you move through, but it doesn't mean that you still can't walk away from selling your home feeling like it was successfully done. Now let's take a look at what we've got going for us here in the Nashville area. So as I've mentioned in previous videos, you know, Nashville has a lot of really great local economic factors that are really working in our favor to help preserve our home prices and even still see home prices continue to grow, because according to the most updated article coming out of Realtor.com, it is talking about we are actually still expected to see home prices rise. It's just going to be at a much more moderate rate than what it was when we were in that really white hot market. So let's take a look at what's going for Nashville. Actually, the state of Tennessee was just rated the fastest growing economy in the country, and we have record low unemployment. So across the state, we're actually sitting at 3.2% of unemployment. But here in the Nashville area, as of November 2022, we actually had an unemployment rate of 2.6. We continue to see businesses relocate to Nashville, which continues to bring jobs. We continue to see a relocation population come into the Nashville area. And sometimes that's for business, sometimes it's personal, sometimes it's both. But as I've mentioned in other recent update videos, in terms of the market update, we do know that another 200,000 people are expected to land in the Middle Tennessee area by 2025. And then another 1 million people are going to be coming to the state of Tennessee, moving here by 2040. With 57% of that landing in the Middle Tennessee area. But we still see that demand, which is helping our home prices continue to grow. Like I said though, it's at a much more moderate rate. So overall, we've got a lot going for us. We continue to have businesses and people move here, and that's not expected to stop. We have a great, roaring local economy with low unemployment. All of these factors into how our housing market responds. So these are things to just keep in mind. And so before we wrap this up, if you are thinking about making a move to the Middle Tennessee area, let's talk about what the median home sale prices are for Brentwood, Franklin, and Nolensville, all located within Williamson County. Let's actually take a look at what the average home sale price in Brentwood, Franklin, and Nolensville was for December of 2022 for a single family home. So let's take a look at the numbers starting with Franklin. In Franklin, the average home sale price for a single family home in December of 2022 was $1,104,316. That's up 15.3% from last year. Now let's take a look at Brentwood. In Brentwood, the average home sale price for a single family home in December of 2022 was $1,393,233, and that's up 17% from December of 2021. And then let's take a look at Nolensville. Again, single family home, average home sale price, we're looking at $841,803, and that's actually up 31.8% from the same time last year. But then I also want to now I know that we just covered the average, but I also want to take a look at the median, because you know the median, it takes away the outliers on either side and gives you that middle number. So let's take a look at what the median home sale price was for single family homes in Franklin, Brentwood, and Nolensville. So in Franklin for December of 2022, it was $896,250. That's actually up 19.5% from the same time last year. Then in Brentwood, it was $1,085,000. That's up 11.3% from the same time last year. And then of course in Nolensville, the median home sale price for December of 2022 was $799,900. And that's actually up 32.3% from the same time last year. So I like to give these numbers because if you're taking the average, of course, you're taking everything into consideration, but in the median, of course, you're kind of cutting out those outliers and really getting a more centralized number. So just know average and median, they do vary a little bit in terms, especially in Franklin, but overall, that's kind of what you're looking at. Okay, and now we're gonna quickly talk about what the average price per square foot is in Franklin, Brentwood, and Nolensville for a single family home. And I know I've mentioned this in previous market update videos, but there tends to be a threshold in each of these communities where once you cross the threshold, it does cause that average price per square foot to jump a little bit. So, but let's first take a look at what the average is overall in each of those. So in Franklin, the average price per square foot as of December 2022 was $348. Then in Brentwood, the average price per square foot was $327 per square foot. And then in Nolensville, it's $271. Now I mentioned those thresholds, so let's kind of go through those really quickly. In Franklin, that threshold is really going to change right around the $812,000 range. So once you hit $812 and above, that average price per square foot jumps up to $382 a square foot. Then in Brentwood, that threshold is about 1.1 million. So once you cross the 1.1 million, the average price per square foot in Brentwood jumps up to $387. And then in Nolensville, that threshold is sitting around the $659,000 range. And then once you pass that, the average price per square foot jumps up to $279. So not as dramatic in Nolensville, but of course you can see a noticeable difference in both Franklin and Brentwood, especially when you start to cross those thresholds in terms of just seeing an increase in the price per square foot. So if you are thinking about making a move to Nashville, if you have questions about the Nashville real estate market, please do not hesitate to reach out to me, myself, and my team. We would love to talk to you. If you are ready to start that conversation, there's a link down below that you can click to go ahead and book a Zoom call with me. Otherwise, if you're not quite ready, that's totally okay too. If you want more free resources, I do have a free Nashville relocation guide down below that you can click and download. But if you ever need anything, again, we're here, happy to talk to you. All of our contact information is below. My name is Caitlin Martin. I'll see you next time.